Mr. Motilal Oswal, CMD of Motilal Oswal Financial Services, joins us right now for one, of course, a word on the numbers as well. But there is so much that's happened that we'll, of course, take his views on the macro picture as well. Mr. Oswal, good having you. Thanks so much for joining in. Let's just start off with how your quarter has been. And I remember the conversation that we had the last quarter wherein you did believe that things in quarter four or the Jan to March quarter would be reasonably better than what the previous quarters were. How has it shaped up for you?
I think if you look at the numbers, overall quarter has been very good from the revenue perspective. I think, and the most important thing is that broking volumes in the market has gone up, and as well as the broking revenue for us has gone up by 25% Q-on-Q basis. So from that perspective, overall, I would say it's I think a very good quarter, the best quarter in the whole year, and predominantly I think led by the broking business, which really saw a huge amount of, I think, cash volumes being increased in the market. If you look at the cash volume in the market, the overall cash market quarter-on-quarter basis has gone up by 34%, and the cash market share, which used to be at 8% of the overall market, has gone up to 11%. So I would say that the market definitely has given us a favorable kind of, I think, tailwind, and we also have been able to improve our market share to, I think, some level. So overall, I think the quarter is, I would say, good, although there were a few kind of, I think, one of the items or adjustments for the quarter. So reported profit may be looking at about 22 crores, but considering I think 7-8 crores worth of one-time or extraordinary items, the operational profit will be at about 30 crores. Operational PBT PAT will be about 30 crores. So that's a fairly good decent growth quarter on quarter as well as year-on-year growth. And one thing is that this quarter we not only have grown on quarter-on-quarter basis, but on year-on-year basis also quarterly numbers have been fairly decent. So I would say that I think a lot of credit I would like to give to the market. The market has really helped us.
Sure. Even so, you've been able to improve your market share in quarter four, Mr. Oswal. I'm sure reading the S&P's revision and outlook on India must have put many question marks about the future as well and how things will pan out in not just this quarter but FY13. What is your expectation?
See, our expectation is that the overall FY12 was, I think, bad. And my sense is that we are definitely going through a lot of headwinds coming from the global as well as, I think, domestic economic, macroeconomic related issues. So it's difficult to predict what's going to be the next year or next quarters. But I remain hopeful that things really, I think, that the markets always really, I think, bottom out much before the actual events on the ground. And if you look at the last quarter, I think overall there was not much really, I think, great excitement in the economy or in the global markets. But markets really gave a good kind of, I think, growth in terms of volume. So my sense is that we definitely will keep on seeing a lot of kind of, I think, headwinds, but overall market has seen the worst. I don't think so that business can go down much worse than what we have seen last year.
The last 10 days of the month of March or the first 1 month of April, Mr. Oswal, did you see some perceptible change in volumes or how the outlook of your global clients have been as a result of the GAR provisioning? The question mark really is, do volumes come under suspect, or does the buying activity comes into suspect because of these moves, and does that impact how Q1 will shape up for you as a company?
Yes, I think overall post-budget sentiments has not been great. I think GAR has definitely created some fear in the people's mind. But my sense is the bigger picture is that we are not able to really take firm decisions on anything. So policy paralysis or some kind of, I think, governance being not really be up to the mark in terms of decision making has created, I would say, much bigger kind of fears in the people's mind, especially the global investors. Otherwise, in last year Q4, I would say that we got about, I think, net more than $9 billion worth of net FI investments came in, and this month I would say is not a great from that perspective. So I think investors don't really have still any kind of, I think, positive sentiments in favor of the country. But these things really can change very fast, and it is very difficult how the government is really going to tackle all these issues in the future. Although small decisions are coming in here, but now the parliament session is also on, so there may be some kind of, I think, noises being created here and there. So short term, I would say I think we need to be very, very cautious. But medium to long term, I don't think so that it is going to make much difference from the market perspective. And I think markets have really bottomed out from the kind of whether it is corporate earnings, whether it is interest rates, or maybe from any other kind of I don't see any bigger negative issue which is right now not there, not factored into the prices right now.
S&P's outlook revision on India, and you know what that would mean for the market, because as Saugata and many other experts have pointed out, there's nothing materially different from in what the S&P is saying. It's just that a credit rating agency to the repute of S&P is coming out and making a statement that they're worried about India's sovereign rating.
For India, but I think across the globe, if you look at the fiscal situation, I think it's alarming, and we are going through definitely, I think, same part of the cycle. I hope that Government of India also really, I think, take it as a slightly kind of warning and try to really, I think, bring some more changes or through some kind of decision-making process. But I don't think so that it's any kind of, I think, serious issue or very critical issue from the market perspective. Because we all know, I think, there's just, I think, putting the same things on the same table. Just try to, I think, maybe, I think, create some kind of warning that if it doesn't happen, then things really may get, I think, worse from here.
Your final thoughts really on what all of this leads to in terms of the market scenario. Next 6 months, in light of all that's happening, what's your sense on what do we do for the headline indices?
I think, as I said earlier, that all the kind of, I think, negative headlines are factored by the market, and market is still very smart, and I would say holding it out. It definitely saying something that come what may, we are not really going to fall much from here. Yes, I think a few percentage here and there, market really can always really fall because of some any specific event which may happen, which is not really, I think, may not be visible here. But I would really remain kind of, I think, optimistic from these levers in the market that we have seen what really, I think, is there. I think there can be something better, like say interest rate cycle, I think, has already reversed. So if the RBI really comes and again really, I think, keep on taking some kind of correction actions, that can give huge amount of boost to the overall kind of economic growth and the corporate profits growth. Because we know that corporate profit numbers are not going to be very exciting. The inflation also somewhere, I think, is not still in the control. I think rupee movement also is quite volatile. So all those things, I would say, is already, there's nothing new about that. I think the government already have started, I would say, realizing something, and they are now talking about digital price control. So somewhere they also are desperate in terms of doing something, but maybe they are helpless because of I think the support not being coming from the allies or the oppositions not at all supporting them. But I remain still hopeful and optimistic that things will be, I think, turning around from here, especially when the oil is also a bit soft and interest rates are on the downward cycle.